Hi, this is Elliot Wavesage. I want to go ahead and just do a quick weekend update going into the weekend here. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education, entertainment purposes. I didn't do a video in the last couple days because just was too many possibilities. But I think we're starting to see some clarity on where the market may be going. The market overall is due for a bounce. It's due for a bounce in this downturn. So the bearish interpretation of the chart for the indices easily could have this finished here in B. We really need to take this high out to start to negate this idea, because right now we have a WXY pattern. So in the Y wave, you need 3 legs and you have 3. But once you get 5, that negates the 3-leg move. And so then it's got to be something different than a WXY. And so is it an A, B, C? But this is really just in 3. So then you really start having to consider that, yes, that we're going to impulse out and pull back and out, and we're going to hit these higher targets. So really taking out this high is important if it can happen. If it doesn't, then this trade here is valid, but a lot of bearish energy was been wasted here, because this has been being aggressively bought. So there is some buyer out there um, just buying these little dips, micro dips, micro little mini crashes. They just can't buy fast enough. So there is still a massive bid underneath the market, and that's why a lot of these stochastics are showing, some cases oversold, need to be reset, bullish divergences, and in some cases you even have the daily fully reset on some charts. So what I was looking at doing today was what is a good buy opportunity for either this bounce, which we should get a bounce, or what could happen is we bounce and fail, which is the most likely scenario here, where we come up and we bounce and then we fail or crash, one or the other. But if we were going to just bounce here to go make a new high later, then some stocks may actually bottom, create enough distance, and then when the market drops to a new low, it actually respects this low. And if that happens, you want to be buying today, because then you're going to get a good price. So some instruments show that type of behavior. One example I posted on Twitter today was the Wolf semiconductor. It really shows that it's at a cycle low with five swings up, which means we should get another 5 higher. So that also implies that more than likely, what I have here is not that likely, and what we're going to see is an extension, and we're going to see this play out in a different cycle, where this is a 1, 2, and we come out of this into these expanded flat area. I really think that's where we're heading with the market, because there's a lot of individual stocks off the October lows that have moved up in 5 waves. And if you move up in 5 waves, you're guaranteed typically another 5 waves up. Even if it's still in a bear market, you would still get that 3-leg move. So once you get 5 up, you pretty much know a pullback is a buy-in opportunity for the final swing higher. It's only when you have 3 up, where then it could go to new lows, and there's no guarantee for that. So there's a lot of individual stocks that are 5 up from the low that have pulled back and ended the October cycle, and some cases have bottomed even. And so you can't be too crazy bearish here, but we are in a downtrend, and I do think the downtrend will continue lower, but I do think we're in a bounce, and I think this correlates with the dollar index that we see here. My dollar index chart has now been updated, and what I think we're going to see now in the dollar index is something a little different here, where we're going to see a bigger connector, where you still had the W down, and then you come up in X and Y here, okay? So then you finished 3. So you finished 3 here. Now here's the thing about this. Obviously this Y leg wasn't deep. So what's happening is now you have another W, and now you have an X, and then we'll pull back in this Y later. And so I do believe we're in some type of pattern that looks like this. So I do think what I expect is we're right now at in the shorter time frame in an A, B, C, D, and I believe we're going to get E, and this will allow the market to rally, and then it's going to be, oh crap, then we get this, and that will finish the sell-off into the indices, into the 430s, maybe even high 420s, and then we find a really good bottom, and then when this plays out here, this X, the market should rally up to new highs. It should pull back again, and then we should get a massive rally into the final move higher. At some point this would end. It may not go this deep, and then when it does, the market's peaked, and then all hell will break loose as we push up into these upper areas in the dollar index that I have here. And this is the bigger chart, because really the dollar index is just a massive bear flag playing out that will probably come back and finish. And it's when we get here, I would be ready for, that is the time I would be worried for a crash in the market to allow this move to play out to finish it. And this is probably when we get here, the end of the grand super cycle bottom in a massive generational low. But I think right now this short time frame tells me there is probably more upside coming. And so my thinking is the SPY will be, like I said, rallying and then dropping, and then it could rally again, pull back deeper, and then rip higher and then peak. That's what I think we're going to see play out, and I'll relabel this with that scenario later this weekend. But I think for the shorter time frame, I think it's pretty. It seems very likely we're going to get some kind of bounce and down like that. It just, something like that is what I'm looking for. If we don't bounce, then what could happen is this is negated, and it's only a three-wave connector. B is done here, and we'll finish C next week, and then be done with this correction. So I do think there's still more upside in the market, but I do think, yes, there is going to be a catastrophe coming, but I think it's delayed. It's delayed, and even we could even put X here and have the pump here. We may not even get this final pullback, so there is even a possibility, and I think some traders are posting this where we pull back like this and then we just rip, and that would be that scenario. So I would say so I'm just trusting the system, even though logic may say it's not a good time to buy, but there are things that were in interesting areas for either a bounce or a possible swing low today. But of course the indices don't show that setup. So the indices aren't a buy. I would not be in any triple levered ETFs at this point unless we get down to here, and then I would start looking at those. People were asking me about that today. I'm not interested in the triple levered bull ETFs until we're down here. It's too risky to trade that here because you always have a possibility of that, and if that happens, you definitely don't want to be in those, even though I think that's unlikely. So I think that's kind of where the dollar index is going based on some data, and it goes to show you why you have to be nimble in this market, because my last, I think, video, we showed that when we were here, the erratic nature, I showed to warn about the breakout, but you could see it still was traded erratically. So it's really in this kind of awkward pattern, because really there's this aggressive buy-in by some unknown entities are really buying this market still, and I do believe we'll bounce and we'll get some kind of capitulation here on this swing is my preferred view, and then that should push the VIX up into these upper areas that I have shaded here. I'm still looking for that. So right now the VIX, relabeled the VIX, as a 5 swing up with a flat connector, and we can even already be ready for wave 3 higher next week like that to finish the correction. But if we are going to bounce, which I think we will, then I'm looking for a deeper pullback. Let me relabel that again. Here, something like an A, a B, and we'll go deeper in C to get that rally, maybe fill this gap here, and then come out of that. But I would be watching this trend line on the VIX, and really when that breaks is kind of the sign that the next leg of the correction is coming. And then the final question is, what's the odds it's actually done and bottom? It's very unlikely, but if that's the case, then it's a flat here against this peak, and it would definitely surprise a lot of people. It would not be favored, but it's possible here. 1, 2, 3, 4, 5. So, but I wouldn't trade the indices. There's other opportunities out there to buy that will give you some upside in case that rare circumstance happens, which is not likely. What I have shown here is probably the most likely path I'm looking at. Some people may even say the connector's done. If that's the case, then the dollar index will just continue higher and the VIX higher. If the dollar index does make another little dip lower, we're going to get something like this, and then we'll come down. The VIX will drop a little more and come down. So it's a lot of possibilities. Okay, so that's the markets overall. But again, as you can see, why do I think there's more upside? I do think the Dow breaking the high in December here is very significant, and we had been watching that for months. And I said if that happened, I said most likely this pattern will break out and higher. I think it will. I think eventually it will come up to these higher areas, and that's a sign that the market should still continue higher despite this pullback. Then we could crash at another moment, at another time later. Something like this, and then we could crash up here. But I do think a short-term pullback is still in the cards, and I still like to see that this dip into this area. And then, of course, if we break this trend line and break that, then it could be a crash scenario. So it is risk, but it doesn't. I don't think a crash is likely, but I do think a dip here is probable, and then a rally out to this area. And when we're up here, then I would be worried about a crash for sure in the market. The technology sector, again, here I have the bearish chart labeled here, and what I'm looking for is a deeper pullback. In this one, as you can see, we have a connector. It should really be finishing at any moment. So NASDAQ shows signs that it may be an indice that is ready to rally. And I still don't like buying it. I would rather buy individual stocks that have a better structure than this. But this is an area where it should produce a bounce, and we could even take that high out before pulling back again, like I showed earlier. But as long as that this high stays, we still have a 3 within this swing. We have a 3 swing. We have an A, B, and a C leg here. With this is the connector of this leg. But once you make 5, then the WXYs negate it, and it has to be an ABC. But you don't have 5 here, so you would have a complete different count. In a corrective manner, we'd have to relabel everything, and I'll do that this weekend to show what that looks like. But the Nasdaq here is showing that a bounce can be at any moment, and if you look, the daily is getting reset here. So keep that in mind as we watch it. So a lot of selling, but also a lot of buying to support it. So just keep an eye on that. It wouldn't be surprising to see a bounce, another failure, and then a rip higher, and then the crash that everyone is expecting. But we are getting this pullback, and we did get it. So anyway, so that's what I'm looking at right now in the market. I am worried a little bit about the Russell. The Russell looks really weak. Again, it looks like it topped in its three waves here. And then you have your five waves up and it's topped. And now we're back in the structure. It can go lower. It could even come all the way back down. The Russell is probably one of the most bearish indices. It also hit the sell area. If using a bearish structure. So I don't like anything about this index. And this is actually a warning sign that maybe there is still a chance of something like that. So I keep that in the back of my mind. So we really need to get back above this, but closing below it on the weekly time frame is very concerning. But the next area, looking at the Russell, looks like we should see somewhere around 185, 183. So that would be an area where it could at least have a short-term rally, counter trend rally. But we'll keep an eye on it. But this is always a concern. So this is definitely something bearish I'd be worried about. Now it could be a flat here in an ABC, and if that's the case, we could come out of that. But I just don't like the close here. But it's just something to keep an eye on. I do think this looks like it's heading lower. It looks like it's heading lower, and this is seems pretty bearish here. As you can see, we tried to break out and failed, and it would, like I said, we could retrace pretty deep here. So knowing that, you have to keep in the back of your mind that perhaps what we could see in the dollar is a scenario where we don't get this rally, and we just start going higher next week, and then we come up and finish it, and then the Russell will be somewhere down in this area when that happens. And then as we bounce, it just kind of bounces around in here while these indices maybe make new highs. So there's something to keep an eye on, but it definitely, the Russell looks very likely to be playing out this pattern right here. It just isn't making any progress. It's weak. It's very this is very much a classic connector triangle type pattern. It just seems likely this is where we're heading with it, and if that's the case, then it seems likely as well that this B wave, that we are going to get a dramatic sell-off at some point soon. The question is it now? I don't think it is. I think it's a little bit later in the year, possibly toward the end of the year now, looking at the way we're developing. But what do I know? All I know is right now the charts are bearish. The indices are going down, but there are individual stocks that have made 5 up on the lows and have pulled back enough where it could make it could really run. So it's really mixed messages across the market. So it's a very treacherous and tough market to trade right now. So you have to be nimble and take your winnings when you can and cut your losses as fast. All right, so gold, it seems pretty likely that gold's going to see 1793 now as it pulls back. And of course, nothing's in a straight line. As you can see, we had this congestion. We should get some congestion and then drop. And then silver should hit 21.20. Typically, it goes into between the 4 and the 2, so it may even go down to 19 when it's all said and done. But as you can see, you have 5 up. So when this is here, that's an important low for a lot of correlated instruments. If this can play out like I have here. And then oil has been interesting. So we have 3 waves done. We should be pulling back deeper in a deeper 4. This could allow the markets to rally as this counterpart. But as you know, we have this 5th wave that needs to finish for the C leg. And then that should set X. And then that should pull back. And then we should get a pullback in Y. My thinking is when this pullback happens, that would be bullish for the market, and then at some point it won't be. It will be too negative, too deflationary. So interesting. We'll see how it plays out now. we did come up against the massive downtrend line. If for some reason we can't get this fifth wave, then it would just be we'd redo the connector as maybe some kind of triangle or bear flag playing out in this X wave, and then we could come back all the way back down to 67. So that's why oil really isn't a buy to dip here. I wouldn't recommend it because it could turn into a very choppy bear flag, and then lower. This spike here may not happen that I have, but I think it is likely. We'll see if what the future holds. So keep an eye on the 2-year. It's still not invalidated the account. This would be a very big indication that much more downside is coming in the market. If this pivot can break, it's trying to break it. It'll be interesting to see what kind of follow through we get next week. If we break that would surely pull the markets down, and we have to be aware of that possibility. So that's another sign. If we get something like this, then the markets should bounce and be supported, and then crash later. So, but this isn't negated yet. So again, mixed message in bond market. The bond market still hasn't made a decision, but this is a huge decision if it does decide to break out higher, because then the 2 is done, and then all hell could break loose, and this would be a warning sign that perhaps one of the unlikely scenarios is happening where you're gonna get this, what I have here, the waterfall, and then B is set. So we'll keep an eye on the bond market. Okay, so just looking at some of the other things going on. So again, I go across commodities, and I'm looking at the OIH. Again, here's a sector that's been beat up for many years, and we have a massive breakout, and it's really holding up well. And if this is right, this should have much more upside to come. This is probably inflationary, right? This is telling me perhaps the market's pulling back and this will rally, so some SLB is part of that, and it did take out this high here, and it did take out this massive downtrend line, going all the way back. So it has a lot of room to run. So I do like that sector. I still like it. So there, not everything's bearish. So oil services don't look that bad. I mean, I'll be honest, they're holding up. So something I noticed today, just kind of scanning the market. All the GDX and all that stuff I'd be worried about. I'm looking at Cleveland Cliffs, and again, you almost end up backing into a low scenario. If this breaks at 1347, then it could come all the way to 5. That would be very bearish. That would be a good clue of what may be coming ahead for the stock market. But if this could hold, at least make another swing up, or extend this connector higher and then drop later, so this I'm keeping an eye on, but it hasn't really, none of these have really shown any indication of direction. Uranium was doing good. Was starting to make a move, and I've been keeping an eye on this, and this is a good opportunity, I think, in a 1-2, 1-2, and then you have a 1-2, 3-4 for another 1-2, 1-2, and now we're coming out. At some point, I think you're coming out to $11, and then eventually out of that. I think it's just a matter of time. I don't follow the market fundamentally, but I love the chart in the 1-2, 1-2 setup. So I've just been kind of patient with this, and hope we can get a 3-of-3 breakout on this at some point. So we'll see how that one ends up. And then I missed the bottom in Mosaic here. So I think that's also another sign things, the inflation trade's gonna be picking up. The energy, the commodities is coming out of this downtrend. All right, discretionary today. So looking at that, again, keep an eye on Crocs. Almost in the area. We'd like to see it bounce again. Here's a good example: up in 5 waves, pulled back in 3. When we hit $190, this will more than likely have another swing higher. This also tells me the market could also be supported, right? Because if this is going to happen in Crocs, chances are the market itself is going to be bullish to allow that to happen. And we should get that. Now, if once this is over, then yeah, it could go back all the way down and break this low theoretically, but now you'll have a corrective move, right? Well, but now that you have 5, you should get this swing. So this is telling you that maybe the market has got some upside coming in the future, right? This is one of those signs. Keeping an eye on Starbucks. Starbucks may have hit a major low here. It's up in 5, it made a connector, and it may be pushing up in its new high soon. So just keep that in mind. I've already shown Wingstop. Wingstop can't seem to go below 159.73, where I called the low. It's just stuck there. Eventually the sellers will give up, and this should rally in a 3 of 3. This is also telling me we should see more upside. We have a higher high. We have 5 up. We have 5 up. We should get at least 5 and a bounce. And this is just a similar setup we saw in Celsius, just on a higher degree. If you're patient, it should play out. Some news will drop and people will go crazy and buy this thing. GoPro's another one to be patient with, trying to come out of this wedge. We'll see if it can do that. Hopefully, we'll keep an eye on that. Then, yeah, the consumer staples is interesting. Celsius, again, if you follow me, we gave you that trade here on my Twitter, mentioned it multiple times. Now everyone's like, go long Celsius. Here they're like, go short Celsius. I warned you about that, showed you the buy here, and now look, we got another rocket ship, and the swings are not done. It's going to continue higher as shorts still try to top ticket, and they'll get blown up, but eventually it will top out. But this is like, here it is. Look, 1 2 1 2. This setup is what ring stop is right now. That setup is what PODD is, pod insulate right now. I like these 1 2 1 2 setups, but you have to be patient. You could even call it that, and so you just gotta be patient. But they eventually play out usually. I remember KDP. I gave everyone this entry, and now we're up in 5. We're pulling back. This could be a great opportunity here for this pullback at 32, 50, 32.20 for another rip higher. When this happens, again, we need 5. So this is also, again, saying the market has more upside, right? The market has more upside to finish these, or it's a major low and we impulse out. All right, there's nothing really else here I want to mention. Let's go to technology. So technology, mixed messages. NVIDIA is in a buy area for a dip. Now, could it be 2? Probably people would think there's no way that whole cycle corrected. But if you look at the RSI, this is what I'm saying. There's people coming in buying this, guys. Look, the whole cycle corrected. This cycle could be done here. There's so many people selling, but there's so many people stepping in to buy. That's what you got to understand. There's a lot of people. This should be down here, and it's not. I'm just mentioning that. That's the 4-hour, and the daily, the same thing. Look at where the daily is. It completely reset the cycle. So, does it deserve to be there? Does it, it's overvalued? We don't really care. But whatever is happening is, yes, there's a lot of intensity in selling, but it's being met with buyers, and the price is not it's not capitulating. So this could still push higher before lower, which is, I know, hard to believe, but here it is. You have your connector, you're down. This is the buy area, and the Nasdaq itself is in a buy area. So this could be bouncing here at 392. It may, could still go lower, but it's got a lot of selling energy has been expended already. Tesla needs more downside. I was looking at Adobe. I think that's the connector. It should get more downside and come back to 479. I'm thinking this has got more room to go. Microsoft looks good for a bounce here. in a fifth wave, or you could also again call that a 1-2-1-2, which is really too bullish almost, but it's a little different look than Nvidia. So I call it like this, a 4 and a 5. And then Apple again, it could be in this B, right? It could be in a massive decline, but it's due a bounce. So it's gonna be very interesting. So Apple either has a bounce and then a massive crash with the market, or it fools everybody in a flat. And then this was a 4 and it make a 5 and negate the expanded flat. If that happens, then it's unlikely that Apple will ever see 125 ever again. Again, does it deserve it? And should it? And logic, it defies logic, but that's just the reality of the swing counts. But right now, the bears are starting to gain control, but it is due a bounce. It is done. Its impulse is almost over. It's almost, if that low, yeah. So in fact, it could be done. That low broke here, so that it actually could be ready to roll for a counter trend bounce. And then we'll see, can it bounce and break this high, or is it going to fail in another massive sell-off? We don't know. Wolf Semiconductor is an interesting one, as you can see here. This is a great, easy 5 waves up, 3 waves back, a great buy area, and it should see another 5 waves higher. It should see $80-$90. This also says market should be maybe going higher, right? With this 5 wave up move. Now, it could go lower. Of course, there's always risk. That's why I always put a stop loss here. But that's that. I like Wolf. I was looking at Shopify. It's like a straight down crash correction. Long-term investors, I think, can buy here and not really have too much concern. It could easily fill the gap. I'll start, reaccumulating it here. Bought some today, but I think this is just one of those straight down crash corrections, and you're gonna get this like left shoulder head, and now we're forming the right shoulder, and then we'll come out of this. And again, Shopify showing 5 off the low, so we should see $100 or higher in the future, in at least now, and then that could be a connector for a massive decline. We don't know. Etsy did break down, so stop. That's why I use stop losses. And yes, it looks like it's going down for the count for whatever reason. So I don't like it anymore. And Wayfair, again, I do like that dip buy here in 3 waves, and it's finding buyers. It's been pretty bullish, so I wouldn't shy away from nibbling here. But it can, but always remember, it can always do this, that type of move. So keep that in mind. And then, as much as Magnite really got blown to pieces, obliterated. I don't like trading it anymore. This was good. I was out of that trade up here when the dollar index was moving higher. Unity is also in a buy area. It's got 5 here. Now here you have 3 swings up, so this one's a little different. There's no guarantee we'll get this push up in 3, so it is risky. It could be a connector, so you have to use a stop loss on that. Robinhood could either be a 1, 2, 3, 4, 5. 2 can go lower. It's a lot of options. It's really tough to trade. Long-term investor, it's probably okay to start buying here. And then Palantir, I believe, is a flat correction in an ABC. I hit the buy area. It's finding support here. This too could be done. We're already seeing some AI stocks running today. We're starting to run some of those stocks, so this could be done. It could be starting to run. The other alternative, again, is it bounces and then comes back. But I like it here. Again, getting out around 19 and getting back in at 15. And DraftKings is another one that showed a good buy. It's probably in a 5. The other more bullish option is it's a 1-2-1-2, but I do like that here. IONQ really is really bullish. It has really good price action. I do think this is 5 down in a connector. It seems like we should dip back to 11, but I think this is a strong opportunity for a really good breakout. I'm really hoping that it's not done because I like to get in on it, but I won't chase it in the connector wave, even though there may be a chance it's finished here. And SYM is another one that broke down with the dollar, got out on that, but now look to get back in. But this should be going much lower, and this is a connector all the way to 29. So this has got more downside. I don't like it right now. People that are in QSI, we should be getting this bounce in B right now. That would be pretty bearish if that's it. That would come back. That would totally retrace the entire move. But it should make one more swing higher. But we should get another dump, and then people can get back in on that, because again, you have 5 up. You should get another rally out of that at some point. And yeah, I think that's all I want to really highlight today. I think China, someone's asked me a YNN. I don't like it because, like, remember, that was a clue. This was one of the ones I think that broke the low that got us the warning sign to get out, and it was a good idea. So it's really a mess, actually. This could be connector. This could be some kind of again, bear flat. Like, I don't like trading it anymore. I think it's going to come back to retest this low at some point at 29. All right, so that's all I've got. Let's see if there's anything I want to mention on healthcare. So PODD, again, I posted that pick, and I like it long term. I look at it, I zoom out. You have your 5 up here. You have a pullback in 3 waves, and it looks pretty much like 5 up and another 3-wave pullback and a massive capitulation wave. So it seems really unlikely that it would go much lower from here. It could still go down more, but like we talked about, this could rally and then the market could make a new low, but this respect the low. I just like this setup, and remember, this is very Celsius-like looking, right? Just a different time frame, but the same kind of idea. You broke the high, you have a massive pullback, and you may come out, pull back deep again, and then some news hits and it just moons. That's what I'm looking for. So this is it's more of a longer term position, and yeah, so I do like that. I was looking at the RSI. Let's go to the monthly RSI here, and yeah, I mean, if you look at it, let's go weekly here. You peak here. It's interesting too, because if you can see, the RSI took out that peak. So anytime I see that, I always think running flat if the price is higher. So I look at that, but this really is 5 waves. There's really no way I can make that. I think I can make that 3 waves. I'd have to make a very unorthodox structure. So that's how oversold it is. So again, I'm just looking at different signals, and yeah, I mean, for the most part, I like it, and you could see on the weekly, it was oversold here at 55 cents here, and these all correlated with major lows. Here, I think it looks like it bounced and it had a divergence here. You see that? So that's, again, we have to watch for that, and here. And so we could bounce and get it. We could do that same thing. So we could see something like that. So keep that in mind. Could get that later if you're in it. Daily way oversold. The last time we were that oversold was right here on February 2016, and look what happened afterward. I mean, so I think the risk reward setup is pretty good here, but do what's best for you. Um, Nothing else in healthcare I was really cared about. Okay, so I'll just go wrap it up, guys. That's all I've got for this weekend. I'll probably do a live stream tomorrow at some point, and we'll see what next week brings, and we'll go from there. That's all I've got.